Alright, welcome back. So we continue in this fourth clip, part 4 in chapter 3. Let's unhide this. So we have done 3 steps. Now we move to the 4th step in order to prepare the statement of cash flows. Right. Now, this statement of cash flows is made up of, if you like, 3 major parts. 3 major parts. So the first part, actually ignoring this, this is the first step, but this is not the first part. You start with the beginning cash. This is the format. The statement of cash flows always starts with the beginning cash. So you take beginning cash here is the beginning of the cash balance at the in the year 2018. This beginning cash is also the same as the ending cash balance for 2017. It's the same. Beginning of this year is the same as the ending of previous year. Therefore, we take this 58 and we write it here. 58. That's the balance. Now, the first part of the statement of cash flow starts with operating activity. So this is this portion. This whole portion here is about operating activity. Alright. So we want to look at cash generated from operating activity. So we have this symbol in the equation just now. It was cash flow from operations. It was operating cash flow was the symbol that we used previously. Here we use CFO. Cash flow from operating activity, CFO. So CFO refers to this portion here. Alright, remember that the CFO starts with net income. So net income is the first item. Net income is taken from here. Net income is here, 893 at the bottom. From the income statement, 893 is here. Then you plus depreciation. You plus depreciation because depreciation is not a cash expense. You take it from here because depreciation was already deducted in order to compute the net income, and this depreciation is not a cash outflow, it's not a cash expense. You add this back to net income. You add this back to net income in order to get the the cash flow based net income, not the accounting based net income. So therefore we add this back, 116, not minus, add 893 plus 116. So these are the major items. So there are 3 major items. Actually 4 major items in the equation. CFO is made up of 4 items. The first one is net income. The second one is depreciation. The third one is change in non-cash current assets. So change in non-cash current assets is made up of actually receivables, inventory, and other current assets. So there are actually 3 items, but these 3 items represent one symbol in the equation that we saw earlier. So this is change. These 3 will constitute, together they constitute the change in non-cash current assets. Then the next item will be the change in operating current liabilities. Change in operating current liabilities. There are 2 operating current liabilities here. One is payable, the other is other current liabilities. We assume all these other current liabilities are operating current liabilities. Alright, so receivables, note this, here we take 164, but note this, here it is negative. This statement is slightly different from the statement of cash flows that we have seen in chapter 2. Here we put this as negative. If positive means there is a cash inflow. Net income is actually a cash inflow for the firm. Depreciation is also a cash inflow because there was no cash outflow. It has been deducted here. Therefore, to adjust for this, you add this back. So it's a cash inflow. Depreciation here represents a cash inflow, but it's actually not a cash inflow. It is an adjustment, readjustment of what you had deducted when it was not a cash outflow, but now you add it back to account for that depreciation being not a cash outflow. Right, so this is this represents when it's positive, it's like a cash inflow. If it's negative, it's a cash outflow. when you come to receivables, you find that the change, we are not interested in the full amount, okay, we are only interested in the change in the amount, therefore receivables is 164. It says there is a use, remember it's an operating activity, so it comes under operating activity here. So receivables will be negative 164. It's the same amount here, but it's not positive. Here it's positive, but here is negative. Why? Because it's a use. Use means there is a cash outflow. So here the number, we are not only interested in the number, but we are also interested in the sign of that number. So it's negative here because it is a cash outflow. Okay, here you use cash because you increase receivables from 992 to 1156. So you use $164 million of cash to increase your receivables. Therefore, it's a negative 164. It's a cash outflow. Likewise, 140, it's a use. Therefore, it's negative here. Inventory, for inventory, from here, this amount here. Then for other current assets, it's positive here, but because it's a use, it must be a negative 139. Now payables, it's a source of cash, okay, payables. So payables here would be 4, it's positive. It's positive here because it's a source, it's also positive here. Then here, other current liabilities, 309 is a source, therefore it's also positive here, 309, So you add all this, note this, this total here, okay, you add all this actually, So this sum is actually a sum of 4 items that we have seen in the equation, which is net income plus depreciation, okay, then minus the change in non-cash current assets, okay, within bracket you also minus the change in operating current liabilities, and therefore here you add. When you open the bracket, then this becomes positive, this 2 becomes positive, this becomes negative, alright. Therefore, when you add all this, okay, then you get this value here, okay, this value here, 879, Now, this is the cash flow from operations, or operating activity. Net cash flow from operating activity or from operations will be $879 million. Okay, so this is the amount that the company makes from the operations. Okay, so operations here include what the company earns from its operations, from net income, accounting for depreciation or adjusting for depreciation because depreciation is not a cash outflow, then making adjustments for the working capital. Here we are only making adjustments for operating working capital. We leave out cash. Alright, so this is the amount, the net cash flow from operations based on the perspective of statement of cash flows. So that completes the first part of the statement of cash flows. Now the second part deals with investment, cash flow from investment activity, CFI. So this is here, this highlighted here. So for investment activity, you start with net fixed assets, which is here, only one item here, which is 80. It means that this 80 is actually a use, therefore it's negative here, because it's an asset. An increase in an asset item means a use of cash, therefore it's negative, cash outflow. Alright, then you have depreciation. Depreciation is also deducted. Why is it deducted here? Depreciation is reflects the use of cash to increase the fixed assets of the company. The perspective here is slightly different from the depreciation here. Here it's positive, here it's negative. Remember, you add depreciation on both sides of the equation. But even though you add on both sides of the equation, what you do is you actually bring both the depreciation values to the right hand side of the equation. Alright, therefore both becomes negative on the right hand side. So here it becomes negative, here it becomes positive. Positive because this increases the net income from cash perspective. Here it's negative because it increases the assets, yeah, the company has used. Yeah, it reflects the use of the cash to increase the fixed assets of the company. Alright, so it's 80 minus, yeah, 116. So if you look at the overall perspective, you add 116 here, you minus 116 here, yeah, therefore you don't change anything overall, yeah, but you add here and you deduct here in order to see, yeah, the cash flows from each activity. If you don't add these two, then you will understate this cash flow. You will also understate your cash outflow. Yeah, so that's not what we want. Yeah? We want to actually know the actual amount of cash flows. Yeah, the full amount. Yeah, rather than netting them off. Yeah? That is why we add both. Yeah, add here, and also we add this depreciation here. Add means like you include. Yeah, not necessarily add plus. Yeah, so here it's negative. Okay, so you have 196. Yeah, so 196 here means, okay, you add these two. Okay, then you have negative 196. What does that mean? It means that the company has used, yeah, $196 million in order to increase its fixed assets. Okay, fixed assets, yeah, not net fixed assets, yeah, but fixed assets in general. Okay, that means it's a use of cash. Yeah, that is the net cash flow from investment activity. Is that okay? All right. So that is the second part, which is very short. Okay, just these two items: change in net fixed assets plus, yeah, depreciation. Okay, change in net fixed asset. Remember, the equation is always change in net fixed assets plus depreciation. Yeah, but remember, in the equation it is minus the CFI, yeah, cash flow from investment. That is why we minus both here. Yeah, you minus both, and therefore you minus the total. Yeah, all right. And the last component of the cash statement of cash flows, yeah, is the cash flow from financing activity. Yeah, this is the third and final component. All right. So from financing activity, you have all the other items, yeah, not covered here. Okay, not covered under operating, and not covered under investment. Yeah, right. So it must be this. Yeah, 1, 2, and 3 items. Yeah, but what we do is we don't use common equity item, yeah, directly. Okay, but because we have to use, yeah, this item, we break this down into 2 other items. Yeah, so we start with notes here. Notes is taken from here. Notes, there is an outflow of 93. Yeah, so we take this. There is cash use of $93 million. Notes, that means notes has been reduced, yeah, by $93 million in that year. Then long-term debt, yeah, also negative. Okay, use of 248 million. Now common equity, yeah, this is positive, yeah, 601. It means what? The company has issued new shares. Okay, this implies that there is new share of $601 million, yeah, because this amount is $601 million more than this amount in 2017. Alright, so this is $601 million. Sorry, here, yeah, $601 million. What we do next is minus the retained earnings, yeah. Or if you use common equity, the formula, there are 2 possible formulas, because here common stock is not given, okay, or ordinary shares and share premium is not given. Yeah, what you're given is the total equity. Yeah? Total common equity is given. Therefore, we cannot use the first formula. We have to use the second formula. If you use the second formula, it should be common equity minus net income. Yeah, but here we break down net income into 2 items. Yeah, remember, net income is actually made up of retained earnings and dividend. Okay, so retained earnings is 601 million. Retained earnings, if you go below, you can see that. Okay, retained earnings is 601 million, which is exactly the same as common equity. Yeah, so the increase in equity is actually accounted for by the retained earnings. There is no new issue of shares, yeah, in this particular company for that year. Yeah, and then dividends. Yeah, 292. Okay, so this is a cash outflow, right? Okay, so when you add all this, okay, then you get this value. Okay, you get this value here. $633 would be the cash outflow from financing. Net cash flow from financing activity will be a cash outflow of 633 million. Yeah. Then what you do next,